Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Steve Brown, CEO of Orcadian Energy. Welcome back, Steve. How are you doing?
Not so bad, not so bad. How are you?
Yeah. So Steve, since we last spoke, there's been, some significant news. There was the news of a successful placing, which I believe raised £1 million.
Yep.
And then there was the latest farm out of the Carra prospect. Do you want to just take the listeners through what this news means?
Yeah, absolutely. So we raised another £1 million. Our objective in raising that money was to try and get enough money so that we can run through the farm out process and keep the project running, but to minimize dilution. So we were very focused on trying to get it done at a decent price, just raising the right amount of money rather than raising too much. So we were pleased to get that done. And then this is actually a deal we first announced back in October last year that we were intending to farm out Carra to Carra. And now we've actually signed the sale and purchase agreement. So, you might wonder, why did it take us such a long time to pull all that together? It turns out that the key enabler for this deal is actually getting the seismic data set reprocessed. We announced that deal we'd done with TGS, and they're busy now reprocessing that seismic. It's enabled Carra to access that same data set, and they'll get on with interpreting as soon as that reprocessing is complete. The Carra team, you probably don't know who they are. It's a couple of people I've known in the industry for a long time. They used to run Antrim. They knew the Fine project, the Dandy, Crinan projects, which we have, and they know this area really, really well. And Carra was always a prospect they wished they'd drilled. And now, they approached us to say, look, we think there's a great opportunity here. It could have 30 million barrels in it if the prospect comes in. What we need to do to work this prospect up is let's get the very best seismic data and let's reprocess it in the best possible way. We worked with TGS so that all happened. And now we've signed the deal with Carra, and they're going to run the process of mapping this prospect. Then they're going to run the farm out process because we need to get someone to come in and drill a well on the prospect. So this field or prospect sits in the east of our license area. It's not really sensibly part of the pilot development scheme. There are other discoveries around pilot that are definitely part of that scheme, but Carra wouldn't be. Just made an awful lot of sense to bring in a partner so that they can run at this 110 miles an hour and see if they can deliver a farming partner on Carra.
So just take us through. So I believe that they're going to assign a 50% interest in that as part of the deal. So talk us through how the kind of like the numbers will work in terms of they've got a certain amount of time to decide to get that almost drill ready. I mean, talk us through the kind of like the timeline.
Yeah. So there's a work program that's going to take about 4 months. That is the first month. While TGS is still working on reprocessing the seismic, they're going to revisit all the old data they had and pull together that information. Then with the new seismic, newly reprocessed seismic from TGS, they're going to remap that prospect, look at the amplitudes, look at all the the seismic attributes that help tell you, it looks promising that there's a prospect there that's worth drilling. And then when they've done that piece of work, we'll go to the North Sea Transition Authority and ask that they be put on a sub-area of the license. So it's quite a small sub-area. It's only 3% of that P2320 license. And then they'll get going and run the farm-out process and try and attract a partner to drill the well. They're not actually that expensive, the wells around this part of the world. They're pretty shallow. These Tay reservoirs are pretty shallow, about 3,000 feet. Actually, in that area, about 4,000 feet. Still, that's pretty shallow. So your well cost is 8, 9, 10 million pounds. So, if the prospect's absolutely fantastic, maybe we'd want to participate in it. But I think the most likely thing from our strategic viewpoint is we want to focus our resources on pilot. We want someone else to come into Carra.
So it won't be a free carry in that respect. It will be them doing the bulk of the work, and then you making a decision as to whether you would come in on that.
Yeah, and what we're expecting them to do is actually to find a partner who'd want to fund 100% of the well, that would take over some of our interests, and we'd be left with a carried interest in the well.
Sure.
But that could actually be a really good outcome for us, because if they get a partner to come in and drill that well, that could satisfy the well commitment on that license. So there are many ways that this whole process can add value to the overall project.
But the scenario that you talked about, if there's a potential 30 million barrels of oil, then you're going to have interest in 15 million barrels of oil overall, minus costs or whatever for whatever the farm-in partner wants. In
the old days, when there was plenty of money to go into the oil and gas sector, a typical farm-out deal would be a 2-for-1 deal. That's sort of the parlance, and someone coming in would fund, say, 100% of the well to get a 50% interest. There aren't been that many deals been done on that basis recently. I think the Europa farm into Serenity they got 46. They paid 46% to get 25%, so that's kind of 1.8 rather than 2-for-1. But that was actually farming into Discovery. The thing that's most important for me here is let's do the work, see what sort of prospect we actually have. If we think it's the best prospect ever, then maybe we'd think about doing something on it. But chances are there'll be risk on it. I'll be very happy for someone else to take that risk. And if the biggest value for us in getting a farm-out deal may be securing the rest of the license. Some thoughts on the current situation then of the share, or not the share price, the oil price, and also the respective, we can talk about the share price, because you're under the share price of the raise right now. We've already said when you were in the 40s that you were seriously undervalued. So we're even more undervalued now, Kevin. Oil price and share price. 17 cents per barrel is what our share price. Well, you're valued at. It's to, yeah. So you won't find cheaper barrels in the AIM market. I don't think there's better barrels, but then, maybe that's my judgment. Someone else's judgment might be different. But, just adding up the numbers, you won't find cheaper barrels than the barrels Orcadian has. So what's the chances of someone coming in and saying, okay, I'll make you an offer and taking you out because you are cheap? They'd have to ring me up and have a chat, Anything's possible. In the long run, what we have is a very substantial project, and very soon it's going to dawn on the companies that are producing lots of barrels in the North Sea that they can save themselves an enormous amount of tax by having a substantial project on their books. There's a lot of companies in the North Sea who've come in recently, backed by private equity money. Their business model has been buy production, look for tax synergies, hedge the oil price, and leverage the balance sheet and hope the oil price goes up. And it's a great business model. It works really well. And because you're buying production, you're taking a lot of the risks out of your spending of capital. And they haven't liked to do development projects. That's been kind of, the new capital that's come into the North Sea has been keen to buy production, not so keen to do development projects. And you have to look back a fair while to see new companies doing substantial development projects. Of course, we have Hurricane doing Lancaster, but that was always just an early production scheme. That wasn't a big development project. It's really Enquest and Kraken. That's the significant project that was undertaken. And these new companies haven't really been focused on doing developments. The tax incentives in the Energy Profits Levy will change that. I mean, I know Liz has said she isn't going to impose it, but I don't believe that
about that because she's saying she wants to reject the windfall tax to encourage investment in North Sea. So, but when we last talked, you said that actually it wasn't really a tax; it was actually almost like a tax levy. It would benefit you in that respect. So, who's got it right and who's got it wrong, Steve?
Well, obviously, I've got it right, and Liz has got it wrong.
Of course.
No surprise there, hey? Politician gets something wrong.
Well,
politician versus real life experience. Which one will win out in the end?
Politician basically looks for headlines. Steve doesn't care about the headlines and tells you the truth. There you go.
It's kind of hidden in there in the energy profits levy, how good an investment incentive it is. And there's actually ways the government could make it better. There's another tax called supplementary charge. And the relief on that, you don't get until the field's producing. If they made that relief immediate, it would make the incentive even better. So actually, I'm lobbying for a change to be made to the energy profits levy to allow an early relief against supplementary charge. That would make the incentive even more. Because actually, when you think about it, what the country needs is new investment in energy. We're desperate for new energy. So anything that can be done by government to encourage operators to put their hands in their pockets and start backing some development projects is to the good.
Yeah, and undoubtedly the government's not stupid. It can give all these incentives, get all the developments going, and then they'll charge them higher tax on the production.
Yeah, absolutely. I mean, we've actually been in an anomalous period. That was quite difficult to say.
Anomalous, it's a tough one.
It was only 40%. That's what it was until this was announced. If you look back over history, taxes have been as high as 88% at the margin. If you look at the tax rate under Labour governments, it was roughly 50%, and under Conservative governments, it's over 60%. And here's the thing, Liz wants to be like Maggie. Under Maggie, the average tax rate on oil and gas was 85%. Now, I'm not advocating an 85% tax rate. It's the investment allowances I like. But there's, the oil and gas business is always taxed differently from every other business. It's a resource business. It's the nation's resource. One of the things you learn when you're in the oil and gas sector is your customer isn't who you sell the product to. Your customer is the government that's allowing you to develop the resources. So, if you're in operating in Africa or Far East, you're often in a production sharing contract. It's really clear that you're just a contractor doing something for the government. It's same here. We're here to develop the nation's resources and deliver energy and deliver revenues to the government. And we get to keep some of it for ourselves. That's how it works.
And if you BP and Centrica and Shell, you get to keep quite a lot of it for yourselves by the looks of their profits the last few days. Absolutely. Yeah.
Just to jump to their defense, they did have huge losses a couple of years ago.
Oh, absolutely.
So we have to fair's fair, The reality is they've had a great time this time, but when oil was $20-30 a barrel, yes, it went negative, but this was an anomaly. Effectively, $20-30-40 a barrel, they were losing on every barrel.
Yeah, absolutely. Incredibly painful period.
And they still had to produce.
And lots of companies went bust. No end of companies went bust.
It's a timing thing, though, isn't it? It's that when the announcement, when energy prices have gone so high, it's hard for your obvious, for your layman to suck that up and see them making billions when there's so many families choosing heat or eat, as the argument is, and it's going to get worse come October, as we know. So I do feel for a lot of these people, and you're already seeing people protesting, going into Shell garages now and saying, "Here's £14, there's £20 worth of fuel. You're not getting my profits," and walking out and things like that. So it's interesting times.
Yeah. There's definitely more of a frisson of rebellion.
Yeah.
Yes, it'd be more interesting though if somebody walked in and said, "I'm not giving you how much is it, 60 pence levy that is on each litre of petrol, plus the VAT. So effectively, I'm not giving you 72 pence in every litre because that's what the government's taking." So, swings and roundabouts. I understand it's like, let's say the company's bad, but actually it's the company, it's the government, all taking huge sums.
Sure.
Yeah, and on the domestic heating, electricity and gas bills, there's green levies on that were there to help subsidize the renewables business and get the renewables business off the ground. There's a time to pause things like that. And this is it. That's what government needs to be doing. To finance it, they need to put their hands in the pockets of the big oil companies.
Sure.
I'll be shocked if Liz Truss changes the legislation, but politicians do.
All right. Well, now we've put the world to rights. Let's talk a little bit about pilot. How are things going at the pilot field? Because that's the biggie, isn't it? That's the real focus.
Yeah.
With the fundraising, obviously going to fund towards a lot of licenses, etc.
Well, we're actually out in the market with a couple of things. We're out with FPSO contractors seeking firm proposals for a vessel for the development. And it's about an 8-week process. We expect, there's always requests for an extension and so on and so forth. But we're expecting a proposal or two on that allow us to choose the best vessel for the development. We're also actually under, and it's being managed by Petrofac, who are our well operator. We're out in the market approaching rig contractors, so drilling contractors who own rigs that could be used to drill the wells, but also to the well service contractors. So that's your Baker Hughes, Halliburton, Schlumberger, to get proposals from them on how they'd help us in the drilling process. So we're moving those things along. We're also talking to other companies about potential farm-in deals. I think that process, I always say it's as long as a piece of string. It just takes as long as it takes. And I'm not giving anyone the slightest clue as to when I think that will be finished. It'll be finished when it's done.
I like that answer. I like the note. I don't like self-imposed deadlines because it happens when it happens. That's the right answer.
Yeah. It's a tricky business, complex business.
Good. Steve Brown, CEO of Orcadian. It's been an absolute pleasure as always. Thanks for your time.
Thank you.
Thanks, Steve.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.